When Trump first announced 25% tariffs on Mexico and Canada in February, the market dropped. But no one knew just how far and fast the market would fall. With each ensuing day, Trump announced more and more tariffs. Of course, the recipients of the new tariffs were not going to take it lying down. Canada fought back and announced their own tariffs on American goods. China said they were ready to fight. Trump said, "Okay, you want to fight? I'll fight with you." He announced yet more tariffs in retaliation. Economists came out in droves to tell the world that the tariffs would cause inflation to skyrocket and a recession is very likely. A flat-out trade war is coming. Basically, doomsday is here. The market suffered. It was already overstretched, having gone up for 2 years straight from 2023. Investors were like spectators at a tennis match between America and the rest of the world. Hi everyone, I'm Catherine Chang. I'm a licensed financial advisor with over 20 years in finance. I'm also a chartered accountant, ex-investment banker, and previously a director of 2 public listed companies. On 13th of March, for the first time in over a year, the US stock market went into a correction. Correction happens when the benchmark stock index, the S&P 500, closes more than 10% down from the most recent high, which was on the 19th of February. That was a chaotic day. Was the market going to crash? People were panic selling. S&P 500 by then had dropped below the key support level of EMA 200, the purple line, which is the moving average price of the past 200 days. The speed and magnitude of the drop was so great that some analysts called it a heart attack fall. Most of the internet stock market gurus appeared on YouTube to allay their followers' fears, looking haggard like they hadn't slept for more than 24 hours. Then, an unlikely hero appeared to save the day. Jerome Powell, chairman of the Fed. The Federal Reserve, or the Fed for short, is the US central bank. Its dual goals were to promote maximum employment and stable prices. That means taming inflation. The Fed committee members meet 8 times a year. One important thing they decide on these meetings is the interest rate. High interest rate is bad for the market, while low interest rate is good. The market had already priced in 2 interest rate cuts this year. Anything less would cause it to drop further. The Fed was going to meet on 19th of March. Was the Fed going to announce that there would only be 1 cut? Or worse, no cuts at all? Thankfully, the Fed said that they would keep interest rates at the current level, and they were still looking at 2 rate cuts this year. The Fed also said that the economy was strong, labor market conditions were solid, and inflation had moved closer to their 2% goal. So, recession was off the table, at least for right now. There was a huge sigh of relief. The market stopped dropping and began trading sideways. Of course, it also helped that Trump stopped talking about tariffs. Earlier, the president had promised that come 2nd of April, all his tariffs would take place. He called it Liberation Day for America, bringing massive reciprocal tariffs that would match foreign countries' import taxes dollar for dollar. The backstory is Trump said other countries were imposing high tariffs on American goods, and he wanted to tariff them back to create a level playing field. But on Monday, 24th of March, Trump said after a cabinet meeting that he may give a lot of countries breaks from tariffs. Basically, he was saying, hey, 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 I was just scaring you. We can negotiate. The market immediately rallied and began clawing back up. However, after 2 strong days, it went back down as Trump announced a 25% tariff on automobiles. The market is waiting to see which tariffs will actually be implemented. So, will the market be going up or down? In my opinion, it's very difficult for the market to go up as long as the tariff issue is not resolved. Look, no one has a crystal ball, but we can deduce from this price action that the market is oversold. Investors are going back in if the uncertainty is cleared up. This is further supported by the growing money in the sidelines. Money market is usually a temporary place to park money until it gets invested. It had grown from $6.041 trillion on 27th of March last year to $7.002 trillion on 19th of March this year. This is a growth of $961 billion. That's a lot of gunpowder to buy stocks. So what can we learn from this drama? Number one, don't panic. Or more importantly, don't panic sell. If you had sold during the drop, you would have realized your losses. If you didn't sell, they would only be paper losses and would be reversed when prices go back up. Number two, invest in good assets. Find companies which are fundamentally strong with strong revenues and profits. Healthy cash flows, of course, are also important. If you are investing in individual companies, understand their business and operating environment. Number three, dollar cost average. If you have a dollar cost averaging system in place, you would have bought during this dip and averaged down your holding price. Then, when the market recovers, you will make more money. Now, if you say it's easy for you to say not to panic, Catherine, I'm the chicken type, or I don't know how to find good companies to invest in. There are so many companies listed on the exchange. How do I find the right ones? Or I don't have time to monitor the market. If the market drops, I dare not put in any more money. If this is you, consider getting a professional to manage your portfolio. Happy investing, and I'll see you in the next video. Bye bye.